Good morning. Yeah! All right. Time to get going. All right, let's turn down our romantic music. Hey, don't knock it. All right, so good morning and welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance, because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please, stay small, stay humble, focus on the long term, and never, ever, 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 ever risk money you cannot afford to lose. I don't know. The camera angles not so good. No. Anyways, hey, good morning. Guten Morgen. Let's get on with it. Let's get an update on recent news headlines. Canadian CPI kicks off the agenda. Canada CPI set to decline in April amid inflation risks from U.S. tariffs.
Australian dollar US dollar retreats as RBA delivers expected rate cut, signals limited easing ahead. US dollar tests weekly low as US debt downgrade continues to weigh.
Czech producer prices fall 1.2%. US dollar slides amid US tariff uncertainty.
Gold price ties up with gains on geopolitical uncertainty remaining elevated.
Mexican peso hits fresh YTD high against the greenback. Forex Live European FX News Wrap. RBA cut rates as expected. Australian dollar falls on 50 basis points debate. The P Bank of Canada reiterates implementation of loose monetary policy.
Loose monetary policy. Sounds good somehow. Sounds good. Yeah, so interesting. If you go to our fundamental section under our fundamental radars, we have a central banking radar. And then if you pull up our data on the Reserve Bank of Australia, we have the RBA's projection for both inflation and interest rates going a year in advance. And our data showed that a cut was coming this quarter, and it was delivered right on schedule. Thank you, TRADARS.com. Yeah, it's all in our analysis. There's no guesswork in any of this. And we get data directly from the RBA. Kind of interesting, yeah. Coming up in 10 minutes, we have inflation out of Canada. What is the Tell me, of all the US dollar pairs, which one should we not trade based on when the news comes up? Not trade. You can trade anything you want, but this dollar pair. Which dollar pair? Type in a question mark if you don't know. There should be people here that know because I covered it about an hour ago. It's already old news. We quantified what to look at, what not to look at in the scenario of as expected, worse than expected, greater than expected. Yeah, totally a trick question, isn't it? That's the one not to trade. You're like, wait, Wayne. You're telling me don't trade the Canadian dollar on this Canadian inflation data? I'm like, yeah. Like, it doesn't make any sense. I'm like, it doesn't need to make any sense. Okay? Doesn't need to make sense. What you think is irrelevant. It's only what you can prove. So 9 minutes and 18 seconds. Okay? I've already analyzed all of this. But check it out. If it's less than 1.6, there's no scalp and there's no day trade. Doesn't even exist. Wait, what? There's no reliable, repeatable pattern inside the volatility. Oh, well, what if it comes out greater than expected? There's no scalp because there's no reliable, repeatable pattern inside the volatility. What if it comes out as expected? There's no scalp. There's no reliable, repeatable pattern inside the volatility on the 2 hour, which is a scalp, or, right? Okay, so yeah. See, these are 12-hour moves. Crazy, right? I know. But it summarizes it. Think of a 12-hour, okay, as maybe a swing trade, or it's not that it'll last 12 hours, but you need to look out for a reliable, repeatable pattern. There's nothing on a 15-minute chart or an hourly or, 4 hour. You have to look longer term. And so we have all that data, and we can see if inflation is higher than expected, 66.7% chance that the 12-hour will produce some up, right? Over the next 12 hours, USD CAD is more likely to be up and down 2/3 of the time in the past. Okay, 2/3 of the time in the past, when inflation for Canada was greater than consensus, okay, 2/3 of the time USD CAD went up. If it's less, 2/3 of the time it went down. And if it came out as expected, okay, 75% chance are down. So there's really just greater or not greater. You see? And then if you really need to see it, all you have to do is click these buttons and it'll show you precisely what you want it to show you. But there's no scalp. And so the reason we have the charts, okay, let's do down. Okay? You can see it went up for 45 minutes and then dropped. It popped for 15 minutes, then dropped. It popped for 15 minutes and then dropped. It popped for 15 minutes. Actually, it popped for an hour and then dropped. So it shows you that there's a repeatable pattern inside the volatility. And it's not even a scalp. It could go up for an hour and then you sell it. So you have to know if you want to buy USD CAD or if you want to sell USD CAD. And if you don't know that, then you're not doing it right. So even if you wanted to sell this, you want it to rise so you can sell it. But it's not a scalp. You could hold on to it for a day, right? Right? Coach, I don't know if you already spoke about it today. So if you did just ignore it regarding the RBA cut, the outlook forecast, does that mean long-term drop? Well, no, you know what the monetary policy is, and so it shouldn't be a shocker, for example. So you've already accounted for that in your analysis. Should you be a buyer of the Aussie dollar or should you be a seller? And you might say, well, I want to buy Aussie dollar because I believe it's my China play. And someone else says, no, I want to sell Aussie dollar because I believe they're cutting interest rates. You're both correct. But you have to make a decision. Are you going to, because look, you can be opposite, but both correct. Because one person is buying double bottoms and higher lows, and the other one is selling double tops and lower highs. Now, nobody knows the future, so it comes down to how long are you going to be in the position. And the one that's more correct on the future path can be in the trades longer than someone that is not. The US dollar is modestly lower versus the three major currency pairs. The Australian dollar US dollar is the biggest mover. Canadian CPI kicks off the agenda. Canada CPI set to decline in April amid inflation risks from US tariffs.
Australian dollar US dollar retreats as RBA delivers expected rate cut, signals limited easing ahead. US dollar tests.
Okay. So anyways, yeah, all this is happening as expected. Very cool, right? So I really think, okay, I really think technical analysis helps you identify the time and the price of entering your trades. Fundamentals tell you whether you should be a bull or a bear. Okay? So strategy and tactics. And if you're consistent, you'll do just fine as a trader. Even when you're wrong, you'll do fine. Because if all you did was buy double bottoms or higher lows, you would be fine. And now, if you only did that in the direction of your fundamental trend, your fundamental bias, you'll do just fine. You don't have to be right. You just have to be a good trader. You don't have to be right. You don't have to be amazing. You have to be patient and disciplined. And we can disagree with each other on direction. You're a bull and I'm a bear. We'll both make money. It's the sloppiness in between that people get into trouble. All right, we're less than 1 minute away. Well, Sky Killer says extra points for the bear. Well, it's just a cutting of interest rates typically weakens the currency. But for how long? See, if you're a bull on Australian dollar because you believe China is going to do a deal with the United States and that's going to increase productivity inside of China, that they're going to need natural resources, they're going to get a lot of it from Australia, then great. Then buy the dip when you see a double bottom at support. Or after that, a higher high, higher low. But you're not chasing. Here we go. Kenyatta, is it going to be greater than 1.6? People expect less. 1.7, they're wrong. They're wrong. Okay. Oh. The market was wrong. Cool. So it was great. It was great. Okay. So we know don't trade the kitty cat, but kitty cat up at some point. USD kitty cat up at some point, right? So you're like, okay, let's review. If it's greater than expected, there's your plan. Done. What do you think, y'all? Isn't that nice? Or do you prefer ambiguity? Oh, look at that. Mm-hmm. That's right, Abdul. Follow the money. Follow the cash. So it does make sense that Aussie dollar loses value because it's less attractive to those that want to hold Australian bonds and treasuries. Cool. But on the other hand, that makes iron ore and coal cheaper for the Chinese to buy. So it increases demand. Oh, so X minus M. This is what we're trying to do. Okay, X minus M. Exports minus imports. Now going to this is cool. What we're looking at here is based on a lot of data. Looking at 15-minute candles on 5 different time frames. Okay, going out days beyond news. Segregating the news by greater than, as expected, or less than expected. On all major dollar pairs. We have millions of candlestick data just based on Canadian CPI. Think about that. Is it millions? Well, no. Okay, so how many 15-minute candles in a 48-hour time frame? Yeah, so 48 times 4, so there's 100 on 5 time frames. So, yeah, anyways, it's a lot. All right. It's not nearly as much as I thought, but then all right, so it's thousands. Okay, thousands. Oh, but going back years. Okay, all right, so it's tens of thousands of candles to produce this one piece of information for you. Okay, that's fair. Thousands. Could be 20,000 candles to produce what you're looking at. Do you understand the power of that? It doesn't predict the future, but it quantifies the past. And then you have to say, well, how is the past different or the same as right now? I like to teach that you already know what you want to do with this, and that this is just a pattern inside of volatility. I want you to really get a hold of that. Okay? If you are a bear on this pair, what does this tell you? Even if this drops, based on what we've saw before, it's more likely to do that for the next day or two. So be careful with your thought process. You might be right, you might be wrong. Okay? If you're a bull and it drops, let's say that far, what we've seen is in the past, it still closes higher 2 days from now, or 12 hours. Okay? 2/3 of the time, even with a drop at the open, 2/3 of the time it closes higher. Cool. That's the reliable, repeatable pattern. Okay. So that's what we know. You just analyzed 20,000 candles to say, in this particular circumstance where CPI was higher than consensus, the probability is more up than down. Only in this situation and only on this pair. And over this time frame. And what happens in the short term is less relevant because we know there's no reliable, repeatable pattern inside the scalp. So here we are. While we were gone, notice that the page updated itself. But anyways, actual 1.7, consensus 1.6, positive differential or delta. Okay. More likely to be up than down. And it doesn't even look beautiful to me, huh? Yeah. So part of it is we knew not even to trade CAD, which is also very useful, I think. Osama says fiscal policy versus monetary policy. Correct. Now, here's the thing, what I'm trying to say, because very often people will ask a binary question. Which one is better? Or which one is more important to Forex? Which one should I follow? And the answer is yes. And then you're like, Wayne, there's a duality in your answer. Uh-huh. Yeah, you should do both. Both have an impact. Both. Okay? Both are correct. Mhm. Markets will be opening soon. Mm-hmm. Mm-hmm. Richard says, but sometimes it takes time for fundamentals to show up in the data. Yes, that's your job. Okay? For example, this is, you know, projections into the future. Okay? And that is part of your job, to not just know what has happened in the past. Okay, so let me give you an example of that. Let's talk, what should we do? RB, let's say. Okay, let's narrow this down. I will do, yeah, we'll do Aussie. Okay, so what do we have? We have backward-looking data. Okay, and then we have forward-looking data. Okay, this is forward-looking. This is forward-looking. This is backward-looking. And this is what happened last week. Okay. The currency pair Aussie dollar has a score of -6, indicating that the base currency is weaker than the quote. Aussie is weaker than the USD. Okay. The pair's overall score has changed by -3 today. Oh. Oh, just today. Uh-huh. So, backward looking, forward looking, all that kind of stuff. Now, we also have guidance. Who guides us? The RBA. The RBA says, or said, okay, because this is the same as it was 2 days ago, 2 weeks ago, okay, that interest rates are coming down. Okay, that's that. This is their inflation targeting. I don't have to explain. You're like, well, it says up and that's, oh, dude, it's them. Okay, they're managing this. So, according to the RBA, the second quarter, we are dropping to 3.85 from 4.1. What quarter is it? What quarter is it? Yeah. Oh, we already have it plotted out. There's going to be another cut in the third quarter. There's going to be another cut in the fourth quarter, and then they're done. There's 2 more cuts. We're done. People are going to debate and debate and debate and debate and debate and debate. Talk, talk, talk. Debate, debate, debate. We have it plotted. Cut, hold, cut, hold, cut, hold, cut, hold, 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 hold. Mostly because we don't know any farther than the first quarter 2026. But under current assumptions by the voting members of the RBA, they're probably done cutting by the end of this year, with no cut planned in the first quarter 2026. Dude, shut the back door. Uh-huh. Okay, and there it is. Boop, boop, boop. Yeah, Sky Killer, and what they mean by that is they don't understand. Yeah. Okay. And then they find out the forecast team at Bloomberg are a bunch of 20-year-olds that just graduated from college, and they've read about recessions in their textbooks. They've read about monetary policy in their textbook. And if they don't come from a good school, if they come from an average school, guess what? Then they know all the rules of thumb, which means they have memorized that when the yield curve inverts, it signals recession. And much, if not most of the time, that's correct. But they don't understand the consequence of when it won't be correct. And we had that in the past, where organizations like Bloomberg predicted the crash that was going to happen because of our inverted yield curve. And I laughed. I'm like, they don't understand what inverted yield curve. They just know the rule of thumb of the yield curve predicts a recession. But I'm like, no, it's a visual display of what's happening in the treasury market. You need to understand that. And I'm like, there's no way. And of course, there was not. So, yeah. So it really comes down to you have to have the data, you have to have the facts, and then you have your own interpretation. But we knew, and we have plotted, and we are continuing to plot into the future precisely what the RBA is thinking. Will this change? You guys think the RBA will change, could change its opinion over the next 9 to 12 months? What do you guys think? Is the RBA likely to change their opinion over the next 9 to 12 months? Hmm? I'd say so. Yeah. Cool. Well, I'll tell you what. When that happens, so let's say they pause sooner. Cool. I'll update the information for you. So, yeah, you would have to see some sort of increase in demand for Australian exports. See, they're in the business of selling products. Okay, let's say you you manufacture sweaters. Okay, you own a sweater manufacturing company, and you have a built-in profit margin. You typically make 30% on a sweater, and you sell wholesale, of course. So you're collecting orders right now for the winter because you have to make the sweaters, and then you have to ship the sweaters to your buyers, and then the buyers have to put them in the warehouse, and then at the right time, usually back to school, they put them on the shelves. Okay, great. But for whatever reason, you're talking to your buyers and they're not buying nearly as much as you expected. Your buyers are just not buying. Uh-oh. So what do? They're like, well, we want to buy your sweaters, but we're not sure, we're not certain. I think we'll go ahead and buy about half as much as we normally. But we don't want, you know, we don't we don't want to take the risk of buying too much. What do you do as the sweater company? Okay, you can lay off half your workers, but your fixed costs are going to be the same. You still have to pay for your insurance, and you still have to pay for your rent. That's right. So you lower price to boost demand. Well said, Richard. So what is Australia doing right now? They're lowering the cost. They're lowering the price in terms of Australian dollar. They're enticing China to buy. Cool. It makes imports more expensive, so Australians are probably going to buy more local products if possible. Why buy French wine when you can buy Australian wine? Because French wine is going to cost you more. Not just the bottle itself costs more, being French wine, let's say, but your Aussie buys less euros. So even if you're paying, let's say, 50 euro per bottle, you need more Aussie dollars to buy that 50 euro bottle of wine. So you're like, you know what? I'm going to buy some Australian wine because it's fabulous. No more Syrah for you, only Shiraz. Okay. And so you change your behavior and you spend your money locally. It doesn't change the value of the Australian dollar. But now the Australian dollar falls, and in terms of Australian dollar, iron ore and coal gets cheaper for China. They need less of their currency to buy iron ore and coal. It gets cheaper for foreigners. So X minus M changes. Exports increase, imports decrease. And that's what is trying to be put together. Cool, right? So that's what's happening. So let's look at these three currencies only. We can throw in that one. Okay. 1, 2, 3, 4, 5 Aussie pairs. Why just those? Because I'm the boss. Okay. So now we're looking at 5 currencies on 5 time frames. I'm done. Wait, I'm looking at 5 currency pairs on 5 time frames, looking for the top 10 or 12 most reliable, repeatable patterns. And these patterns are trending up patterns, trending down patterns, or trending side patterns. That's it. 5 pairs, 5 time frames. That's 25 charts. Now looking for those top 10 patterns. 250 possibilities here. Cool. What do we see? Well, let's look for congruency in the, okay? 4 hour may be bearish. Okay? Aussie specifically. Euro 4 hour Aussie may be bearish. 4 hour Aussie may be bearish. Okay? Daily, what? Aussie may be bullish? That's weird. Okay? Daily, Aussie may be bearish. Bearish, 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 bearish. Except this one. So, something weird's happening there. Maybe you don't want to look at that. So, now you need to know that now you know these patterns exist. Now you know on the other time frames the patterns do not exist. It's kind of like the CAD news. The stuff on the 15-minute chart doesn't exist. So for 2 hours and 4 hours, when it came to the Canadian news trade based on CPI, there was nothing on the 2 hour and 4 hour. Nothing. You're going to get volatility, but no reliable, repeatable pattern. So what we're saying here is there's nothing on a 15-minute chart. There's nothing on a 30-minute chart. There's nothing on an hourly chart. And there's only 4-hour charts and daily charts. And out of the 5 pairs, okay, there were 10 potentials. And of that, only 5 of them had patterns. What's this pattern? Consolidation and maybe Aussie weakness. So you can follow this up. And what is your plan? Your plan is to anticipate that this turns into a bearish channel. Well said, Richard. Okay, let me follow up on Richard's comment. You might have great technical analysis, but you're trading the wrong pair on the wrong time frame, and you're not getting the results. Or you're trading the right pair, but in the wrong direction because you don't know the fundamentals, right? And so what happens is you're always, maybe not always, but often, you're betting on the wrong horse. What I'm trying to do is narrow it down for your highest probability of success. And then you got to kick butt at patience and discipline using technical analysis. Looking here, okay, it's a triangle. Now notice it's coming from here. So very often you probably have been taught to sell this high. I treat this as not sell high. I teach this as just simply consolidation. Okay? And if it breaks out, and it seems, this chart is saying it seems to be trying to break out to the upside. That's all it's saying. So I would suggest if it does, then your strategy is to look for this to turn into a bullish channel. Okay. And once again, you're shorting the Australian dollar. So you have congruency in what you're doing. You shouldn't be long this and short that or vice versa. That doesn't make any sense. Aussie Swiss franc, once again, non-directional. So what you've been taught is probably something like this. And you know what? I have the stats. Maybe I'll do that this summer. I have the stats, though, because most gurus think this is true because they read it in some other guru's book. And that guru read it in someone else's book. And that guru read it in someone else's book. And it goes back and back and back. And now it's known as the universal truth. Everybody knows. It's common sense. Guess what? I have the data quantitatively. What if you saw this pattern 1,000 times? What if you saw this pattern 4,000 times and you remember every single instance? Non-biased. Because, you'll get confirmation bias. You'll only remember when it does this. You'll only remember when it does that. and you'll kind of forget the times it doesn't work. What if I could tell you the percentage of this? Well, I can, because I'm a freaking genius. Actually, no, I have the data. I just have the data. So this is why I treat this as neutrality. Okay, and I treat this as neutrality. So these are sideways trends. Cool. So I'd rather let it break out and then take the new channel. Let it break out, take the new channel. Let it break out, take the new channel. And ideally in the direction of my fundamental bias, because then I understand why it's happening. Not just that it is happening. Cool. Oh, it's so good, isn't it? Now, I got to be careful about this. A flag. Well, do I want to buy Aussie? Well, I understand the technicals here, huh? I do understand that. I'm going to pass. That might work out. That's fine. But if these are hinting Aussie weakness, I don't want to buy it over here, even if it presents itself. I don't have to be in every trade. I just have to be profitable. And how do I feel about this? Well, I'm going to measure this as, maybe down, maybe sideways, maybe so. I'll pass. So I'm going to let this happen or not happen before I make longer term decisions. Huh? Cool. I want you to be able to do this. Yeah. We have performance coaching multiple times a day. Okay. Peter's going to go over stock trading today. How to trade the S&P 500, NASDAQ, and DAX, and other global stock markets. Right? He makes a living as a trader. This is what he does. And he's going to show you how he does it. He's been a member of our community for over 10 years. Okay. Cool. And then that's at 2:30. Then there's another one at 4. Then Jessica's doing a Ride the 5 at 5. We've already done this one. And we already did the fundamental one. And then we did one at the European Open. This is like, I don't know, let me guess. Well, I guess I don't have to guess. Well, one of them is not on this. Let's see. Upcoming. Oh, I wanted to do past. Past. Okay. Upcoming. Oh, I got to take that off. Past. This is what I want to see. So today we have 1, 2, 3, and this is the one, 4. So 4 hours from now. But then we have the 5th and 6th. So just today, 6 hours, or 6 sessions, I should say. 6 sessions of performance coaching. Just today. And that every single subscriber to TRADARS platform gets all these tools, including the training. And then just because we're nice, you can also lower your spread by receiving a cash rebate as you trade. Oh, you're welcome. You guys like lower spreads, right? Anybody like cash? Anybody like cash back? Yeah, this is all part of TRADARS. Yeah, Maida leads a group on Friday afternoons. A peer-to-peer group. Cool beans. Okay, cool beans. You get everything. That's it. There you go. And if you want to add our prop fund and join the prop fund group and get the prop funding and get a rebate, well, that's just an easy little upgrade. Awesome. Peace on earth. May the pips be with you. May our profits be above average. I will see you later today at 4 p.m. if you subscribe to the TRADARS